A big overhang for the industry are the tariffs coming from the U.S. And so how are you future-proofing yourself or preparing for that?
Yeah, the strategy that we followed at BlueScope for many years now is really to be a manufacturer in the country that we operate in. And I think that's what is future-proofing us or protecting our businesses. We're a very large steelmaker from our perspective in North America. We produce about 3 million tonnes of steel. So we're a domestic manufacturer, a domestic steelmaker. We're continuing to invest. We've invested more than $2 billion in the US in the last 5 years. So a significant part of our future growth. The tariffs potentially impact the exports that come out of Australia and go to the US. We export 200,000 to 300,000 tonnes a year. So our multi-domestic strategy, or manufacturing in country for country, is really the strategy that protects us from extraneous issues like tariffs.
Mark, $2 billion in the US over 5 years. I mean, just given the episode we've seen with Nippon and hitting a bit of a snag there with that takeover bid, it still seems that Trump administration is like, show me the money. You know, they still want the investment there. There certainly seems to be some of the conversations reportedly happening with some of the Chinese companies as well, not in steel, but just sort of generally as far as wanting that FDI in the US as far as Trump's onshoring campaign is concerned. Has that changed the narrative for you?
No, it really supports our narrative. We've been positive on the US economy for many years now. We've continued to invest, took full ownership of our North Star asset. Then we've expanded that asset, backward integrated into scrap, are now looking at further downstream capacity, the acquisition of the paint lines to take some of our value-added capacity, from Australia, or capability from Australia and other parts of the globe to the US. So we've been bullish on the US economy for some time. It's why we've continued to invest there. And I think it fits very neatly with the new administration's targets or objectives of having investment in country, manufacturing jobs in country, and particularly in regional areas in the US. So I think it fits very nicely with our strategy.
Iron ore prices and China demand, how have you been watching that? What's the impact on your business?
It's been very tough in the Asian markets. Large volumes coming out of China, something like 110 million tonnes of exports in calendar 24. Only ever been one period where it was larger than that back in 2015, 2016. So that's had an enormous impact on prices in Southeast Asia. And of course, the maintenance of the high levels of production out of China have also kept raw material costs high. So spreads, as we call it, the difference between sell prices and raw material costs, have been at historically low levels. The work in Australia around ensuring our business is as efficient as it can be, and our continued growth in value-added products like ColourBond and TrueCore have insulated some of that impact, and thankfully that strategy is taking us further into the premium and value-added products, because it's a pretty tough time right at the moment to be a commodity steel player in the Asian markets with the volume of steel coming out of China.